Tesla Incorporated, usually known as Tesla, is a well-known vehicle brand with Elon Musk as its CEO. It's selling the most expensive luxury cars with unique technological advancements that set it apart from other brands. Now you might be wondering, why would anybody pull out their stocks from Tesla, a multinational and multi-billion-dollar company? Cathie Wood, who serves as CEO, CIO, and founder of ARK Invest, recently sold her shares in the company in response to mounting investors' apprehension around Elon Musk's purchase of Twitter for $44 billion. A well-known investor in Elon Musk's company, Cathie Wood, recently parted ways with 10,035 shares of her own company's stock for a total value of $8.8 million. Despite Cathie's recent decision to increase her firm's target price, investors have been caught off guard by the approximately 27% decline in Tesla's share price over the past month. According to Cathie's ARK Investment Management, the number of shares of Tesla's stock will increase by the year 2026, going from 2,800 to 4,600. On April 14th, ARK unveiled their brand new model, which is significantly more than 4 times more expensive than their previous release. Welcome to Smart Stock Academy, where you'll discover videos about businesses and insights from your prominent CEOs. Thank you for joining us for today's video, and let's explore topics that will awaken your curiosity when it comes to stocks and investments. Make sure to like, share, subscribe, and click that notification bell to assure you that you'll be updated whenever we upload videos. When talking about the movement of the price of Tesla stock and the impact that investors have had over the course of the previous years, the name Cathie Wood comes up very frequently. After Tesla reported impressive results for the first quarter of the year, Cathie Wood's firm ARK Invest decided to sell its 0.64% shares in the company for more than $100 million. The flagship ARK Innovation ETF saw a loss of 0.52% after selling Tesla stock totaling $70 million. ARK Invest has Tesla shares through 3 of the company's 6 active traded exchange funds, which are located in St. Petersburg, Florida. These exchange funds include the ARK Innovation ETF, the ARK Autonomous Technology Robotics ETF, and the ARK Next Generation Internet ETF. In total, the 3 ETFs owned 1.31 million Tesla shares worth $1.15 billion before Cathie sold 10% of her shares. Investors hurried to acquire Tesla stock as Musk's refusal to explain the source of the money he used to buy Twitter caused a stir in the financial community. Despite the fact that Tesla is not a party to the agreement, ARK has been making a profit off of the sale of Tesla anytime the price is greater than $1,000. After Cathie bought shares in Tesla, the stock price dropped 11% in a single trading day, which brought an end to ARK's month-long run of booking profits. The research revised its estimate for the price of a Tesla automobile earlier this month, bringing it up to $4,600 by 2026 from its previous expectation of $3,000 by 2025. Cathie used a strategy quite similar to this in March when she sold more than $200 million worth of stock in order to invest in businesses that had just experienced value declines of as much as 50%. 2 of the 3 ARK funds, including the ARK Innovation ETF, which held the highest investment in Tesla, sold a combined total of almost $57.5 million worth of shares, while the other 2 funds sold nearly $147.5 million worth of shares. According to data from ARK's daily transactions, the market was able to rebound from a sell-off that was caused by geopolitical concerns within 2 weeks, and sales of Tesla shares had surged by more than 40% during that time. Since the middle of January, this was the first time the company has sold any Teslas. Midway through the month of February, when the stock had dropped about 30% since the beginning of the year, this investment company bought over 60,000 shares. Despite the fact that Tesla was ARK's most successful investment, the company sold a total of 6 additional stocks with a combined total of $21 million. Some of these stocks included Vertex Pharmaceuticals and the software company Splunk. due to the fact that Cathie purchased Coinbase for more than $100 million over the same time period. She was able to replace them with a significant interest in other prominent assets, including the streaming game site Roblox, Roku, and Zoom. In comparison, the stock prices of Coinbase, Roblox, and Roku fell by 19%, 48%, and 42% respectively during the course of the year. Tesla's stock price experienced a decline of 12% from its all-time high in November. Why is ARK engaging in the practice of reselling Tesla stock? Because of the inherent volatility of a stock. ARK knows how to make purchases and sales during times when Cathie anticipates that prices will fall. According to Cathie, it is not unreasonable for them to take profits if they have an idea that experts are hyperventilating to stocks such as Tesla. They anticipate getting another chance to buy the stock at a discounted price when there is another conflict in the future. Tesla owns 10% of ARK's flagship fund, which equates to a stake worth $1.2 billion. This is a decrease from the 11% of the fund that Tesla had been in October when the fund was first established. There are reports going around that management at ARK Invest has made the decision to liquidate part of the Tesla stock holdings they currently have. According to reportage of the event that goes into greater depth, this assumption is not entirely accurate. This is true that the corporation sold some of its Tesla stock, but the amount that was sold was only a few tenths of the percent of the total shares. Putting less than 10% of your overall assets into Tesla does not indicate that you are getting out of a certain market stock. It is highly likely that the proceeds from the sale of Cathie's company will be put toward funding the acquisition of other companies that have greater potential for positive growth. The idea that Cathie has proposed, which we assert is founded on disruptive innovation, is garnering an increased amount of skepticism on Wall Street. The amount collected in January was over $1 billion, which is significantly more than the total amount collected in January of the previous year, which was $941 million. The short Cyan made the observation at the time that it is absurd to be against innovation in the United States. One of Cathie Wood's critics in hedge fund asset management, which was established by the investor Michael Burry, notable for having foreseen the disaster that befell the property market in 2007. Cyan Asset Management revealed late this year that it has a negative put options on 30 million ARK shares. First and foremost, Cathie established her name in the business world as an exceptionally insightful market analyst because of her estimates concerning Tesla before the massive increase in the stock price of the company in 2020. The 5-to-1 stock split that was proposed by Elon Musk has proven to be an effective and durable business strategy. After launching ARK Invest in 2014 and naming these groundbreaking funds after the biblical Ark of the Covenant, Cathie, on the other hand, acquired a well-known name among investors and became a professional. Financial advancement can be achieved through rapid technological innovation and is one of the forces of ARK Invest and Tesla's growth. They don't have a singular focus or attitude towards this topic. Rather, they each have a variety of interests and viewpoints based on Cathie's early statements. However, early investments in Tesla also included another component. When questioned about it, Cathie responded that Tesla was a value company due to the fact that the company's store was trading at a discount to its fundamentals. That indicates that Cathie believed Tesla stock had a great deal of potential to expand after considering the company's profits, sales, and other factors. She was positive that Tesla stock had a great deal to offer to the market when she first started working there, which is why she was able to convince Musk to keep the firm open and why ARK invested a significant amount of money in the company. Cathie Wood has provided a number of forecasts regarding the potential value of Tesla shares in the future. She predicted that the price of a share of Tesla stock would reach $4,000 by the year of 2023, back when it was trading for only a fourth of what it is now. It is important to keep in mind that this took place before the 5-to-1 split. To put it another way, the post-split equivalent share price was $800, which was 2 years sooner than she anticipated. The fact that Cathie Wood is optimistic about the long-term perspective of Tesla is the most essential thing that can be learned from the analysis. To begin, the proportional sale only generated revenue equal to 0.26% of ARK's overall assets, which is not a significant amount by any means. It should not be assumed that the fact that Cathie Wood and her team exchanged a small number of Tesla shares for another stock is in any way detrimental to Tesla as a company. Restoring the balance of diversity makes it possible to pursue further opportunities elsewhere. During the time when ARK hasn't sold its share, the stock of the firm increased by close to 800%. On the other hand, the vast majority of individuals are skeptical to the current rate of growth will be maintained for a good number of years to come. The increasing market presence of Tesla makes it more reasonable to expect the business to continue this path toward more traditional growth. Cathie appears to be optimistic about Tesla, as evidenced by her recent interviews. According to Bloomberg, Cathie suggested after a recent decrease in Tesla stock that adjustments might really be helpful and that they keep all of us in check by keeping us humble. She also noted that the most powerful bull markets that she has ever witnessed have weights of fear built up around them, which she perceived as a dedication on the part of market participants. It is anticipated that ARK funds will maintain the same level of optimism towards Tesla as they have maintained throughout the course of the current market season. That's it for today's video. Let us know what you think and leave it in the comments section so we'll know what your insights are. Again, make sure to like, share, subscribe, and click the notification bell for more updated videos about the business world.